All right, welcome back. Episode 27, Invest Info. And this week's topic, we're going to be speaking about a Teslanaire or the Teslanaire. Pretty much, Market Watch did something on it. This is Bloomberg. And we're going to speak about those that on Tesla's 700% yearly chart, 1 year chart. Along the way, it's made millionaires, which some have just deemed Teslanaires. One individual, or many individuals actually, but I'll give the example of one individual who invested $10,000 in Tesla in 2017, and then $10,000 became $1 million. Some have become millionaires even faster through options trading, right? Tesla fell to $300, 300 range in March. Certain individual bought call options, right, which are they're affected. They move a lot more greatly than the share price in terms of percentage. And so Tesla shoots back up to $1,000, and this one dude who bought uh, out of the money call options, meaning he bought call options, betting that the stock will go way above its current strike price, and it did. And he turned that $20,000 into $1 million in a matter of months. So there was a lot of people that's profited off Tesla and its rise. And despite the fact that Tesla is trading at over 1,400 price to earnings ratio, what do I mean by that? Currently, I think Robinhood has it at a PE of 1,427, and what that means is if you put $1 in, it'll take you 1,427 years to get your return back on your money. That's what the price to earnings mean. If a stock has a PE of 1 to 1 price to earnings ratio, meaning you'll make your money back in 1 year. So lower the PE generally in value investing, the better. Growth also plays a huge factor, or the PEG ratio, price to earnings over growth, right? And that's a lot harder to judge when it comes to technology. So, even so, the current stock price of Tesla, it doesn't seem rational. I mean, a lot of people can't see it as more than a car company, but yet the stock continues to rise. Kathy Wood is a huge investor in Tesla, as she sees it as disruptive. I've heard both cases, the long and the short case for Tesla, and the fact that it's not earning really much money. It's making revenue, but the earnings, if you look at it through Yahoo Finance, it's not really earning anything yet. People are making millions and millions of dollars off Tesla. Now, here's the caveat, right? And we know this from previous lessons. If you trade, whether it's in options or in shares, there's a buyer and a seller, right? So what do I mean? Those that bought Tesla at $300, that means somebody had to sell their shares at $300. If somebody bought call options at $1,000, that means somebody sold call options at $1,000 strike. So there's always winners and losers. It's a zero-sum game in terms of trading. So those investors that kept buying those Tesla shares cheap, that means there was somebody on the other end losing faith in the stock and selling their shares cheap. Now, what's the point of the lesson? The point of the lesson is Tesla is like any other stock when it comes to the fact that those who are in early, understanding what they own, understanding what they're buying, get really the great reward. Now, on the way up, yes, you're going to have certain individuals that come in and out of the stock and make a ton of money. But that's really just gambling. Gambling is not investing. There's a difference, Sure, you have excellent poker players. You have people that go in a casino and could win more times than they beat the house, right? But that is not investing. Investing, as Warren Buffett says it, is buying something with a high degree of certainty that we're going to make profit in the future. Right now, a part of that is finding bargains, and you often find bargains in sectors people do not want to touch. All right, the guy when he put $10,000 in 2017 into Tesla. You look at the chart of Tesla; nobody wanted Tesla. And this is just the pattern of the market. we speak about pump and dumps, right? But overall, the market is a pump and dump. I mean, you get in early, you seek profits, and you take profits. And then when you sell those shares, you're buying into somebody else that hopes that what? That the stock will continue to go up in the future. Now, from a value standpoint, if you try to value Tesla, it's very hard to value Tesla, to see where this company is going to be in the future. And there's a lot of people that short Tesla because, they're not the number one EV car maker, and all these different other reasons. But Elon Musk betted on himself. Elon Musk he made $55 billion betting on the equivalent of a 10-year call option that he didn't want to get so much salary as betting. He wants a stake in the company. He wants to be compensated in shares in this company based on future earnings and future growth. And he won big. As the past year went by, he made $55 billion, making him the second richest under Jeff Bezos in a very short time. And the stock just continues to run. Now, you have to ask yourself, from watching Invest Info, what's the stance on Tesla? Well, Tesla is simple as this. In value investing and investing, we're buying something at a margin of safety price. Now you have to ask yourself, from a valuation standpoint, is Tesla trading at a margin to safety price? The answer is no. It's way overpriced. But those out there that could understand it could say, look, this thing, like Kathy Wood said, this stock is supposed to go to $15,000 a share. But that's not our job to judge. We want things simple. We want to be babies, like to the point that it's so simple we get it. If you don't understand this, you don't have to gamble your money. There's so many different companies out there. There's so many different opportunities out there and there are still bargains, even though it's getting harder and harder as the market returns to inflated prices. There's stocks out there that's still relatively cheap that we could invest in, things that we understand. And guess what? The time will come, because if you look at the stock market as a whole, it really is just what's that? It's pretty much you're waiting on your turn. You're in a sector. The sector is not doing well, but from a valuation standpoint, you understand it. You see what it's going to be. You did an intrinsic value calculation. You say, look, this is going to be worth more in the future. I know no one wants it right now, but that's where I'm going to be. And the thing that everybody wants is a thing really to avoid, and the thing that people don't want is the thing you should be buying. And Carl Icahn said it best: as simple as that, but it's easy. It's simple, but not easy to do. It's easy not to. It's not easy to look at your friends or look at somebody that's making 700, 1,000% in a week, 2 weeks, to not get tempted into kind of mimicking that mindset of quick money. And guess what? If someone made money very quickly, again, it's a zero-sum game. If somebody made money very quickly, that means somebody equally on the other end lost money very quickly. And we're in the business of staying in the game for the long run, right? That's how come Warren Buffett advises us. And not just Warren Buffett, all these billionaires, and I think that's a huge difference. You have a Teslanaire, which is somebody that's made $1 million off, Tesla, or a very hype stock that's trading well at astronomical price earnings ratio. But the billionaires that you read about, the Warren Buffetts, the Bill Ackmans, the Carl Icahns, the Mohnish Pabrais, all these guys, Jack Bogle, you name it, all these legendary guys, they have a simple approach. You buy things when nobody wants them, and you sell it to them when they do. So, concerning Tesla, I'll have to take the stance of Charlie Munger, which is I wouldn't touch it, but at the same time, I would not short it. But that's up to you as a personal investor. This is just advice. This is not just not a financial advisor, just advice. The hype is getting more and more insane, and temptation is there. But like I said, there's over 50,000 stocks on the market. There's so many different opportunities to and things to invest in. So I just wanted to speak quickly on being a Teslanaire and the Teslanaire and where this thing might go. I wouldn't be surprised if this stock continues to rise or if it falls. I don't know. I'm staying clear of it. And that was just this invest lesson speaking on being a Teslanaire. Tesla is no different than any other um, in terms of the hype. The hype is not new. You can look at a company. Plug Power is another EV company. Stock went from $2 to $35 now. But if you go back on its lifetime chart, in 1999, the stock went to $2,000 a share, over $2,000 a share. It went from 2,000 to $2. So just be careful, be mindful when you're investing, and understand what you own. All right, so I'm gonna see you guys in the next one.